Good morning and welcome everyone to Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Indian equity markets poised for a positive opening buoyed by positive global cues. GIFT Nifty closed the trades around the 21,610 level versus the previous close of around 21,500 odd levels. Talk about the US market. Dow Jones jumps more than 200 points for ninth winning day. S&P 500 nears a record, while Asian shares advance too, tracking Wall Street's rally. Traders shrug off the warnings from policy makers trying to control in the expectation for Fed's rate cuts going forward. FIIs, well, they've sold in, but to an amount of 601 odd crore, and DIIs have bought in equities to an extent of 294 crore. FNOQs, well, FIIs remain the net buyers in index futures, index option, bank nifty futures, bank nifty options. The only place where they've been sellers is stock futures. What comes in FNO ban? New in the ban is Indus Tower, Delta Corp, IRCTC, PEL, RBL Bank. What still remains in the ban is Manappuram, SAIL, Balrampur Chini, Z Limited, National Aluminium Company. What comes out of the ban is India Cement and Hindustan Copper. Talk about Nifty PCR. It's at 1.13 versus 1.12, still indicating there are more puts that are written as compared to calls. But let's get going with the strategies of the day with Rajesh Palviya from Axis Direct, who joins us early this morning. Rajesh, good morning there. Trade setup according to you, are we looking at a positive start, market strategy and the immediate support and resistance level for Nifty as well as Bank Nifty?
Good morning, Nickey. Yeah, trade setup is on the bullish side only, and overall structure for both indices are on the bullish side. Yes, on the higher side, the 21,550, 600 are the supply zone. On the downside, the 21,350 is the key support area for Nifty. For Bank Nifty, 47,700 is the important level for today's session. And on the higher side, once we crosses above 48,000 level, then possibly we may witness a short covering action in Bank Nifty. To play this weekly expiry for this Nifty, one can initiate here short straddle strategy for writing a call and put of 21,450 at the money strike. By doing this, 147 is your inflow of premium. Keep your stop loss of 185. Again, once this premium shrinks to 75 or 80 point, then you can book the profit also. So that's the strategy one can initiate at this moment.
All right, that's the word coming in. 21,500 mark, open above that level. Well, we're looking at gains to an extent of nearly 0.3%, 0.4% as we speak. It is a good start to the markets like we were expecting and anticipating given the positive global handover that we've had. Of course, let's also talk about Bank Nifty just to see where the momentum has been building up. Bank Nifty also is witnessing some amount of activity there. Today's day and session belongs to IT counters. So let's pull up Nifty IT before we go on to address another sectoral indices. Well, Nifty IT, it is a good start to that one. 0.75% gains coming in for Nifty IT basket overall. And let's also go up to the top gainers and the top losers that we have on the screen just to see where the momentum is stacking up. Also do bear in mind the fact that DOMS and India State Finance Corporation will be listing in today. NTPC, Hero Motorcorp and Wipro. These are some of the top gainers that we have. BPCL, Indus Bank and Nestle India. These are some of the other gainers that we have along with Tech Mahindra, ONGC and Tata Consumer Products. Of course, as I suggested, that it is a day which belongs to the IT counters and they have been doing well in trade. Maruti Suzuki and M&M on the losing side. But Rajesh, come in on this one. What do you make out of something like a Wipro and TCS? What do you like from the IT basket? I'm sure you preempted this question, but what do you like within the space?
Yeah, so after opening, yes, whole focus is on the IT stocks and most of the IT stocks again, showing good traction in terms of buying. We like both stock, TCS as well as Wipro. So TCS is already trading about to its near-term breakout level. Overall structure is on the bullish side. 3800, 3810 is the important support area on the downside. Till stock holds this level on a closing basis, I think there is a high possibility that stock may continue furthermore upside towards 3950, even 4000 kind of level in the continuation of this up move. Wipro is already shown good traction in last couple of week. Looking at the near-term, short-term structure, now stock is on a verge of giving breakout above previous swing high of September 2023. So 445, 446 is the important level as the stock is already trading above those level. If it crosses those level with the volume action, then possibly Wipro may also show some short covering action, and we can see a level of 465 to 470 on the higher side. So Wipro is in a process of forming a bottom after a long underperformance, and I think one can look at this stock to buy also at this moment. Keep your stop loss of 430 to hold your long position in Wipro also.
Okay, that's the word coming in. It is a good start to the markets. Nifty has opened in at fresh record high. IT stocks, as I mentioned, continues to be in focus. Wipro also is a top recommendation, or one of the recommendation coming in from Rajesh. Let me address the news, the stocks and news for IT at least, where we are talking about Accenture's read-through and what does this mean for the IT basket. The revenue is coming at $16.2 billion, which is up by 3% in dollar terms and 1% in constant currency terms on year-on-year basis. Margins have been down by 70 basis points year-on-year. Operating margins have come at 16.7%, which is up by 20 basis points YOY. In terms of outlook, they expect 2 to 5% growth in constant currency. In terms of revenue, they expect the range to be in $15 to $16 billion versus $16.2 billion in Q1. How will this impact? Essentially, Morgan Stanley says that the weaker than expected Q2 guidance essentially has offset an inline to slight beat on Q1. The no change in discretionary spending also needs to be watched out for. Incremental concerns in UK more than that also negates the kind of beat that otherwise the company has reported when it comes to the revenue profile per se. But right now, IT stocks are doing typically extremely well. What I would also want to mark is DOMS Industries. It's going to be listing in today. There is this whole sense of euphoria with the way the issue has been subscribed. The final issue price has been fixed at 790, and the issue, do bear in mind, was subscribed 93 times on final day of subscription. Now, analyst community expects the stock to list around with 65% premium over issue price. Talk about Shelter Finance Corporation, a bit of dark horse, I would say. That is also going to be listing in today and subscribed by 36 times. Analyst community expecting 30% premium on the grey market basis. Well, talk about Varun Beverages. That is also the stock of the day. Pull that up and just to see the kind of momentum that we're looking at. 15% gains coming in for Varun Beverages. It's an upgrade to buy. The target has been raised to 1,419 rupees from 1,070. The South Africa acquisition announcement is a continuation of company's inorganic growth strategy. Deal is valued at less than 1 times EV to sales. South Africa is the largest beverage market in Africa, but has limited PepsiCo share per se. But that's the word coming in for Varun Beverages. Rajesh, come in and weigh in also on Varun Beverages. 15% uptick. You think you're better off the counter, or you think fresh, one can look at it perhaps even now at this level?
So overall, long-term structure is on the bullish side. The gap up opening already there in the stock price. I think if you get any opportunity in this school of action towards 1300 or 1280 kind of zone, then you can look to again buy this stock, as this stock is clearly moving in a higher top, higher bottom formation across all time frames. So buy on dips is the strategy. This stock is one can keep in their long-term portfolio also, as overall stock is showing strength across all time frame. So I think if we get chance around 1300, 1280 zone, then we may deploy some long trade around those level with the stop loss of 1250.
The word coming in, but Rajesh, we're just going to leave it at that, and thank you for taking out the time and having this conversation with us.
Yeah, thank you.
All right, let's also bring in now the fundamental side of the story, and of course there is a lot to take home and talk about. And to take the discussion forward, we're being joined by Feroze, Azeez, who's the Deputy CEO at Anand Rathi Wealth. Well, Feroze, good morning.
Good morning, Nickey.
How have you been doing? It's been a while that we've chatted.
Yes, I've been doing well, and I'm trying to enjoy the festive season, which is just around the corner.
Festive greetings in that case. What do you made out of the current stance of the market? Of course, we're looking at record high level, a bit of euphoria. You see queue for lineup of IPOs typically coming at a very lofty valuation, and perhaps does that concern you a little bit with the kind of bullish move that we're witnessing, or you think now it's the time to get there in the markets and actually go pretty bullish on the markets right now? What's the strategy there?
See, it doesn't concern me at all, and there are reasons why so. Because if you look at the kind of earnings growth upgrades we've had, 960 is the earnings number for Nifty, which I think is a great number. 944 was the last number, so that's been revised upwards. FI in the month of December have put in 45,000 crores. Of course, owing to the state elections and the possibility of the same government continuing, which is what capital markets love. Capital markets love continuity. Irrespective of the government, they love continuity. So that's the second point. The third, if you look at the kind of domestic liquidities also being very, very good. But coming back to the IPO point, I'm not too concerned about IPOs and their valuations, because a lot of people who participate in IPOs are very short-term investors. If you look at the kind of trading volume on the date of listing, you realize that the 50% of the guys who apply, or even 70% of the guys who apply, are just coming for a short-term gain. So money moves hands, and then IPO is back to normal. It becomes a business as usual for that stock, and then it in the formative years develops its actual valuation, which may be very different than what the IPO had happened. But having said which, if you look at, there are about 165 companies in NSE 500 greater than 50p. So why wouldn't somebody coming into the market value their company a little higher when one third of the NSE 500 companies are greater than 50p and 34 companies in NSE 500 are greater than 100p? So depending on the environment, I'm sure the IPOs are going to be priced, trying to capitalize on the euphoria.
So, Feroze, what are you suggesting to your investors out there? Sure, the category will differ. Advice coming in for the big HNIs versus retail investor, given the risk appetite, given the kind of goals. Of course, the time duration will differ. But if one was just supposed to look from a very retail perspective, what is the advice? Do you think one can now look at buying perhaps the ETFs, or you think one can look at now going into just the passive index fund, and SIP, perhaps if they want to capture in the momentum, SIP would be a little slower route? Or you think there are these large cap names which typically one can look at in the likes of HDFC Bank, and now perhaps even IT, given that there is some amount of FII renewed interest coming back into the markets?
Yes, Nickey, you've made several points. Firstly, what do we tell our HNI is to follow retail. Unfortunately, what's happening is in the HNI market, people love this whole bit of trying to be a little different, trying to be a little fancy. If you look at the kind of numbers, if you look at from 2021 FY, in the year preceding COVID year, HNIs or lump sum outflows were 1,22,000 crores. That was the kind of outflow. But SIP number was still positive, almost about 1,00,000 crore. So what I'm trying to say is, in the subsequent year, you see Nifty doing 73%. So who made more money in mutual fund? It was the retail who made more money. Now, this financial year, you'll be surprised that there has been a 28,000 crore outflow. If you take the total inflow minus the SIP inflow, the net inflow outflow is 28,000 crores negative. So point I'm trying to make is when in December when the SIP number was 13,000 crores, and today you see the SIP number at 17,043 crores. The retail has in this almost 1 year, has increased their SIP allocation, but HNIs who do lump sum buying and selling have redeemed money almost 28,000 crore by the end of October. So first point is, don't chase fancy stuff. It might look optically good, but the returns or risk-adjusted returns are suboptimal. Mathematics says that. That's one thing which we say. Don't buy an index fund unless there is a gun on your head. If you look at people going in for the euphoria of index funds, if you look at our model portfolio of 14 schemes, has beaten Nifty as of yesterday by about 12.82%. So when you listen to what the US investors tell you, you may forget what is there in the Indian context. Indices in India are not formulated very well, I would like to say, because there's a lot of bias towards the number of stocks which can fit into an index. There are almost about, if I'm not wrong, 81 companies greater than 6,000 crore market cap, not a part of NSE 500, but the smallest NSE 500 company is 3,200 crores. So if twice that market cap is still not fitting into NSE 500, is it the best way of computing what is a great representation of Indian capital market? The answer is no. So I don't recommend index funds, not just because they're very bad at return or good at return, but I think risk-adjusted return, you're better off elsewhere.
So passive investing is clearly out of the window when it comes to you, and depends really what looks fancy to you at the same time, right? Looking at the risk appetite. Having made that point, let's also talk about the theme that you think you'd be looking out for in 2024 with the lower interest rates, falling interest rate scenarios. You think something in the like of auto, NBFCs will make a big comeback, real estate, which started doing well. Of course, in YTD basis also, the sector has been an outperformer as compared to the bunch of other names which otherwise has been making news. What do you make out of it?
Yes, so you're absolutely right. When you look at rate cuts expected, we believe that from June next year, RBI should do about 50 bips rate cut in this calendar year. In the financial year, we can expect a rate cut of about 50 bips to 75 bips from the RBI next year in the full financial year starting from June. So rate cuts are going to be the norm next year. There are 152 rate cuts globally expected. If you sum it up all from all central banks, that's 152 rate cuts. So coming back to if this is the already expected situation, you don't make money or lose money on expectations fructifying. Only if there's a difference from what the market is expecting and what reality turns out to be. That's the differential where you make money or lose money. So I personally think that's a story which is not going to be a surprise, that rate cuts are going to be the norm in the financial year of FY25. So a lot of money which was supposed to be made would already be made and it gets discounted. So that's point one. So the theme you would want to play next year is definitely going to be rural spending. If you look at how the Indian government has spent its money, it has spent it very, very prudently in the first 7 months. In the first 7 months, the fiscal deficit penetration has just been 45%, whereas in the first 7 months, the historical average is 73.7%. So the government is saving a lot of money to spend in the subsequent 5 months, which is of this financial year, which will result in a lot of rural demand going up subsequently, because like for example FMCG, the distribution is already in the nooks and corners of the country. The volume growth is going to be driven not by penetration, but it's going to be driven by the spending pattern and the consumption bit. So point one I'm making is anything which has rural spending as the backbone of its volume growth will be a great sector to be in.
So something like an ITC, perhaps Britannia, or let's just say even Varun Beverages, that's another one which is today is at least not a like-to-like comparison, sure, but Varun Beverages is doing typically well after the South African acquisition, 15% uptick there. These names suddenly start looking fancy. How do you look at it?
Yes, of course they look fancy, and they look fancy. I'm not allowed to comment on a specific stock, but of course you're absolutely right. They look fancy. They are in a frenzy for some time. Then again they go through a lull period, and again something happens, and then news bring them back to the foray. So point is, there is going to be periods where certain businesses or certain stocks are going to be helping people, short-term people, make more money. But I think the kind of re-rating which is possible in certain businesses, those are the ones which you can hold for the long term. And there are several such businesses which can have a huge amount of re-ratings, and the re-rating triggers are FII holdings. Now, if you look at the top 10 holdings of FIIs, where there's been a massive change in FII holding, there is a huge PE re-rating, and that's for the long term. And there are several the smaller businesses where FIIs have started taking part in this calendar year. Otherwise, FIIs were only looking at the big boys of the Nifty 50 or at best the Nifty 100. But now they are participating in the smaller stocks. So I'm highlighting to the viewer that you may want to get into the nuance of the FII ownership increase, resulting in a buoyant P rate.
Okay, that's some cues that we need to dwell and perhaps talk in more detail. But on the face of it, there is a bit of just diverting from the core topic that we were just having right now. Let's also talk about RBI tightening the norms for AI investment in AIFs by NBFC and banks. And on back of that, you've seen something like a Piramal Enterprises and India Bulls also coming under pressure. What do you make out of such developments, and how would you like to assess the impact of these development on sectors like banks and NBFCs?
See, AIF, by which you mean the alternate investment fund, are meant for HNI investors. I don't think AIF as a platform should be used by an institutional investor for that matter. If you have large corpuses, you're better off building your own system of not having a manager. You can definitely afford to have a treasury which operates into the alternate investment space, and you don't have to go through a fund route, because the kind of inefficiencies and starting from tax inefficiencies to profit shares to fees, you're better off building a team. If I am a bank and if I want to use AIF as a platform to get into an alternate investment fund, but my treasury is large enough to actually create a deep research and get the manager employed by me rather than having profit shares which have hurdle rates of 12-13%. If the hurdle rate is met, there's a catch up of profit share. So I personally think institutional investors should ideally avoid common platforms like AIF, especially in alternate investments. There has to be more match of each investment idea with the owner of the capital.
All right. Also, let's talk about a spike in crude oil prices, which is on concerns over disruption in the Red Sea, apparently weighing down on the investor sentiment to an extent. Usually, when you have a direct correlation coming in for the oil price and equity market, which is a point well established, but it's only during the time of such concerns and geopolitical concerns put together that the trend might be little different. Correct me here if I'm wrong. How do you see that situation, A? Do you think that will weigh down on the markets? How are you looking at from the markets perspective? Are you seeing more 5-7% kind of an uptick ahead of the general elections, given the anticipation and the euphoria that builds in, or we are just running ourselves ahead of what we could actually establish?
So I'm not too worried, Nickey. Any event which happens which changes prices of any commodity or an asset, we believe that has to be assessed whether it's going to change the moving averages of that asset's price. I personally think not significantly. So from a business standpoint, only if the average prices change dramatically because of a certain event does profitability change. But sentiments change on price and businesses change on average price. So I personally think I would discount this event as not a very long-term change in average price, but change in price for sure. So that implies that capital markets can give you some opportunity to buy in because of the negative correlation which crude oil has with equity. But I would not categorize this as an event which can change the average prices of crude oil for long times, and that's where businesses actually have a difference in PAT. So that's I would say not to be too worried about its impact on equity markets significantly. But I think if it so does, that's a buying opportunity because that will not sustain in terms of moving the average prices up.
Feroze, what do you also make out of Accenture muted Q2 revenue forecast? Do you think, I mean, IT stocks have been doing well in the last 1 week, and today's session also, it's not really very it's not very different. Do you think much of the negatives are now priced in at the valuations that they're sitting at? The outlook seems to have already priced in that the second half also will be difficult, and from here on you can actually see these stocks doing rather well. Do you think they've bottomed out?
Yes, I think they're bottomed out, and when they're doing badly is when it's the time to actually build a sector in your portfolio, because you get the stock which you want as a fund manager or as a retail investor or even an individual HNI investor who wants to play the sector or the stock himself or herself. So I personally think, yes, they are close to bottoming out. point one. Don't ever expect a full bottoming out is what I would tell a viewer. Anytime you see green shoots of a rise during bad news is a great indicator of it bottoming out. And that should be your trigger to build a sector. But if you look at the sector, IT as a sector, we have 7.6% contribution in the Indian GDP. And I personally think in the next few years, we will have 10% contribution in the GDP coming from the IT sector. 16% of the AI personnel in the world are supplied by India, which is the third largest. So if AI is going to be the future of technology businesses, then we have to see what kind of talent pool do we have in India. And 16% of AI talent pool comes from India, which I think for the world, which I think is a big number. So there's going to be a structural difference in how IT is going to operate. And I think the agility even in the large businesses has been very high. And they've been able to take adversities and change business models to actually acclimatize to a very, very dynamic sector. IT is a very dynamic sector. What was so relevant 5 years back becomes obsolete. So agility of a certain business, and especially top businesses for a sector to do well, becomes critical. And I think IT has those key attributes to avert risk, which are thrown in the way of a technology business.
Sure, you spoke about rural, you spoke about IT theme, we spoke about NBFCs. What also next I wanted to chat about is IPOs. DOMS, of course, will be listing in today, and you have bunch of other names such as India State, Shelter Finance also, which is going to be opening in, which is going to be listing in today. Within the IPO space, what do you like?
So I would not be allowed to comment, Nickey. So from an IPO standpoint, I personally think just on a generic level, IPOs are not so much of a fundamental game. They're just a pure demand supply game. The kind of leverage which happens, especially with the ease of investing now, which SEBI has done, when money also may not get debited from your bank accounts. So it's more of a demand and supply game. Long term, I would not invest in an IPO. I would wait for the demand and supply to settle down. I would like to see what's the kind of valuations the business does. So if you're trying to make a quick buck in IPO, great. From a long-term investing standpoint, especially in a euphoric level, I would not buy an IPO for the long term. Of course, when markets are very bad and still a courageous IPO comes through, which is very rare and event, that time I can buy long-term stocks using an IPO application. Otherwise, it's going to be a demand-supply game, if at all you so chose to play.
Point well taken, Feroze. We're just going to leave it at that. Thank you so much for taking out the time and having this conversation with us. Let's also talk about main board IPOs. Azeez Engineering IPO opens today. Issue price band at 499 to 524 per share. Suraj Estate Developers IPO closes today. Offer so far has been booked 2.42 times. And Motisan Jewelers IPO's final day. Now the issue has been subscribed by 51 times. Do bear in mind the fact that this is the company which sits with a lot of promoter issues. So do keep in mind the track record and the fundamentals in place before going all out. At least in the fundamentally on the stock, sure can chase the listing pop. Muthoot Microfinance IPO closes today too. Offer has been booked by 2.83 times so far. And Mufti enters into second day of bidding. Issue has been subscribed by 2 times thus far. RBZ Jewelers IPO also second day. The issue has been booked over 2 times. And Happy Fortunes second day too. The issue has been subscribed by over 2 times. That's pretty much it when we are summarizing the primary market actions too. But with this, it's a wrap, and goodbye from the entire team who puts this piece together for you. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.